Hello, and welcome to this week's edition of Murphy's Market Minute with Elliot Omenson and
Nathaniel Vossman.
Hey, Rip, get over here. We actually did something, you guys. We have a guest you haven't seen. Well, come here, buddy. Come on. Rip, come on. Come on, get up here. Come on.
There we go.
Yeah, there we go. We got Rip back in the house. He's been dying to come to work, and it's been a while. So, but I got a theme song for the market this week. Here we go. It is up, right?
Yep.
How's it doing, Nathaniel?
Doing quite well. This week has honestly been one of the best weeks. And
Are you saying the markets love it when Iran gets bombed?
That's what it's looking like. I know. Yeah, I know. Like this time, just a few days ago over the weekend, people were like worried about the stock market. But you know, when things stabilize and you know conflict turns into peace talks. That's what the market likes to see, and we're seeing it go up quite a bit, and pretty much right now at the moment we're pretty much at all-time highs.
Yeah. The S&P's up 4.37 for the year. It's quite the recovery year to date.
Yeah, we're down just barely below all-time highs that we saw in February.
Yeah,
like less than 0.1%.
Yeah, pretty awesome, huh? Yeah, what did it hit? 612.9.
I see. February 19th, it was closing at 61.44.15. So we're literally we're at, right now on my screen, I'm seeing 61.41.
614?
6144.
0.44?
61, like 6,144.
Oh, I was looking
That's
at
what it was.
I was looking at the SPY.
Oh, yeah. I just.
S&P 500, yeah, you're right.
But it's the same idea.
Yeah. I was wondering why my calculations were off. But yeah, there you go. 6-1. Yeah, it's funny how we have different. Yahoo Finance is at 6143.95 February 19th.
6143?
Yeah. It's funny how they have these slightly different measurements. Right? So I mean, we are right there. The Dow year to date is up 1.93. The Nasdaq, my favorite, year to date is up 4.48. Yeah. Now, also, what other good news did we get this week out of the Fed?
So it's looking pretty likely that still a couple rate cuts on the table this year.
Yep.
And so projections are showing still 2 rate cuts. So I'll probably see that maybe here in a couple months, and then maybe another quarter rate cut kind of Q4 time later on this year.
Yeah. Now, we do have Department of Labor released some data Thursday, showed 1,974,000 or 1,974,000,000. It couldn't be billion.
That'd be
the whole world filed for unemployment. It's 1.974 million. Continuing claims were filed on the week ending June 14th, which is up from 1,937,000 the week prior. It's the highest level seen since November 2021. Economists see an increase in continuing claims as a sign that those out of work are taking longer to find new jobs. So Jefferies U.S. economist Thomas Simons said that employment risks are trending higher. So that is one of the downsides to some things that are going on at the moment.
Yeah. Which could push for the rate cuts potentially.
Yep.
So,
Yep.
But you're kind of fighting with inflation expectations too.
Yep. Tariff revenue is on pace for another monthly record in June. Customs and certain excise taxes stood at more than $26.7 billion. So that would cover the U.S. government for what, 1.2 minutes?
Yeah, not as long.
Was it even a minute? Would it even cover it for a minute?
Yeah, maybe more than a minute, but not as long as we'd like.
No.
But it still adds up. I mean, because
it's better. It's better than nothing.
Yeah, you annualize that, and that's like over $300 billion. So
yeah. Now here's one for you. Do you think the fact that mortgage rates fell below 6.8% for the first time since May is going to do anything for the housing market?
That's a good question.
It is the 4th consecutive week
of
having rates dropping. So that's a positive sign, I think. I don't know how big a one 6.8 is. Even if you're below 6.8, 6.7 and change, it's still kind of high.
Yeah.
Let's see here. Oh, the other one other negative thing is the U.S. economy shrank 0.5% in the first quarter, which was worse than earlier estimates had revealed.
Yeah, but I know like the expectations are somewhere between 3 to 4 for the next quarter. So,
but wasn't that where we imported a ton of goods?
Yeah, so that was
in anticipation of the tariffs.
Yeah, that was the biggest impact. Was definitely like the extra imports because that draws away from GDP growth.
Yeah,
and that's more of a timing thing. And then now this quarter, it's, I think I was seeing like projecting like 3.5, 3.6%. I've seen even higher. But
they said that imports expanded at 37.9%, the fastest since 2020, and pushed GDP down by nearly 4.7 percentage points. So it's really not like nobody stopped. The GDP didn't really drop in all reality. We just imported a ton of goods, but it made it look worse than what they initially thought.
Yeah.
So,
but yeah, on Polymarket, I'm seeing the betting odds, and I think this is even low, but on the odds of GDP growth being more than 2% in Q2 is at 70%. So that's a general consensus there.
Yeah. And one other thing to note, I think, is Federal Reserve Bank of Richmond President Thomas Barkin. He said, "I don't expect the impact on inflation of tariffs to be anywhere near as significant as what we just experienced during the pandemic. There are signs that consumers will try to move away from tariffed goods, which could limit some of the upsides for higher inflation." So, I think they're smart to tone their rhetoric down on tariff-driven inflation. So,
yeah, because I was reading something, and like I was like seeing like the expected inflation by end of the year, and just still in the 2 range. Even if it ticks up, it's like 2.6, 2.7.
Yeah,
which isn't nearly as scary as what you'd think, considering all the pandemonium that has gone on around that.
Yeah. Yeah. So, I mean, really, I don't know. Okay, here's one to get into. Have you seen any new reports on consumer sentiment? Because when I was listening to Ken Martin, the new head of the Democrat National Committee, talk a couple of days ago downtown, there was a comment made about consumer sentiment having gone even lower, and I thought it had started to tick up.
Yeah, I mean, I know it ticked up, especially from April, but April was just so low, so pretty natural to tick up from there.
But yeah, I mean, I don't know. I feel like most people are feeling pretty good right now, and I would be hard pressed to believe that consumer sentiment is.
So this is ChatGPT, but I was seeing like the preliminary one at 60.5, which is up from 52.2 in May.
Yeah. So Friday, June 27th is the next release date. Their last one shows consumer sentiment improved for the first time in 6 months, climbing 16% from the month before, but remaining about 20% below December 2024 when sentiment had exhibited a post-election bump. All right. So it had taken a big hit, but it had definitely jumped up 16%. It'll be really interesting to see what it comes out with tomorrow. It's tomorrow, right?
Yeah.
So next week we'll report on the consumer sentiment numbers. Markets are up. We're back to all-time highs. The 2-minute war in Iran is over with, apparently. At least that was 2 minutes was our part of it.
Just about, yeah.
We were like the what do they call that pitcher that comes in at the end of the game?
Closer?
Yeah, the closer or whatever, We're just like the guy, You just tap him in. He comes in. He does something spectacular, and he's like, "Yeah, I'm out.
Yeah,
now give me my check."
Mariano Rivera just coming in.
There you go.
10 pitches later, he's out.
That's right. And he gets paid $1 million.
Yep, more. So,
yeah. So we're like the closer. Israel does all the hard work, and boy, did they do a spectacular job. My goodness, their intel, just incredible, and and it looks like there's significant. I think you're gonna. I don't know. I think we're about to see a period of pretty secure geopolitical stability.
Yeah, I think as long as like things stay pretty stable around the world, then things should be looking pretty good. Because I know like a lot of these earning reports have been real strong so far throughout this year, and probably will future guidance is looking strong, and so these companies and ultimately the SP 500, all these markets are looking poised to perform pretty well.
Yeah, I really think the next 6 months are going to be spectacular. Do we want to make any predictions and then go back and see how right or wrong we are? Like, do you think we're gonna add another? It's just fun to make wild stabs.
Yeah, especially when you're not even like taking a lot of research, just going based on feels.
Yeah. Do you think we'll stack another 10 points onto the market? Do you think we'll do 15? I'm super optimistic. I'm going with 15.
I'll say somewhere closer to 10.
Okay, all right. I think that fits our personalities.
I wouldn't. I would think if it's got to throw a random number out there, I would just say SP 500. It's still pretty good considering.
Oh, I'm going off Nasdaq.
All right.
I'm all tech. I'm tech all the time.
Yeah.
I think Nasdaq's going to go up another 15 points.
Yeah.
So we'll close out just under 20 for the year.
That's fair. Nasdaq, okay. I'll bump it up a little bit. I'll say a little over 10.
Okay. All right. We're gonna put this somewhere in our notes, and that way you guys can make fun of us at the end of the year when we're wrong.
I think we'll be pretty close.
Yeah, I think so too.
I'm confident.
Yeah. All right. Awesome. Well, quickly summarize. Mortgage rates are down.
Yep.
Wars are over.
Mm-hmm.
Markets are up.
Definitely.
Consumer sentiment's up. Earnings reports are great.
Yep.
Unemployment, we're struggling a little bit. I mean, we're at full employment
numbers. Still healthy.
It's still very healthy, but it's a little bit higher than what was expected.
Yeah.
So there you go. Until next week, this is Elliot.
Nathaniel.
And Rip, Sleepy Rip.
Yeah, no profanity.
Checking in. All right. Yeah, I swear on my other podcast. I try not to on this one. See you guys. Have a wonderful weekend.